Hello, I'm Greg Bunnell. Welcome to Market Call. Kim Bolton's on the show today. He's the president and portfolio manager of Black Swan Dexteritas, and he wants to take your calls, your emails, and your tweets on technology stocks. So give us a call, toll free, 1-855-326-6266. You can send an email to marketcall@bnnbloomberg.ca. Of course, you can hit us up on Twitter. Someone might even take a look at the Twitter account. Always great to see you, Kim. Welcome back to the show.
Thanks a lot, Greg. Great to be back.
All right, we don't want to admit it, but, you know, winter is pretty much upon us, no matter what the calendar says. We're all freezing in Canada. That means the end of the year is coming, and wonder where these markets are going to head. We've been hitting all-time highs, but seems a bit of an indecision lately in the trade.
Just seems to be a melt-up over the last month and a half, hasn't it? It's interesting, you know, through sort of, I was last year here in October, but, you know, during the summer into September, there was just a great deal of volatility. But then come October, middle of October, everything started to melt up. And I think the catalyst for that has to be that liquidity infusion that the Fed...
Well, the Fed said, don't worry, this isn't QE, nothing's wrong, we just need to tweak a few little things.
However, we still are going to put in $60 billion a month starting on October 15th. And that seemed to be the trigger where the market just seemed to continually melt up. And you can see it almost every day come the North American Open, that the buyers just sort of sit there just waiting for it to come to them.
All right, so that's a very interesting thing. We'll watch to the end of the year. Would you think in an environment like this, I mean, and soon we'll be talking about the Santa Claus rally. Whether it actually shows up or not is a real thing, but we always talk about the Santa Claus rally near the end of December.
We're expecting a little bit of a pullback, and I don't think you're going to get a significant pullback because you sort of have to look for the next catalyst, and there doesn't seem to be an awful lot on the horizon. Maybe they come up with this phase one, but it seems to be so priced into the market, the phase one on the tariff wars. So we think between now and the end of November, you'll probably have a little bit of a pullback, 3, 4, 5, 6%. But I think this liquidity infusion, you know, it's going to get more and more media, and going into the end of the year, I think, yeah, you'll probably get some more melt up, and certainly going into the first half of 2020, I think it looks okay.
All right, I don't know if we'll have time to do this justice, but you always have these great sort of visual representations about your investment ideas. This one is about autonomous driving and the ecosystem there. If you can maybe share this with the audience and tell us what your thought pattern is around autonomous driving.
Greg, I could go on and on about this, but you know, we've been drilling into the autonomous driving ecosystem. We got into it actually back in 2016. And it's interesting, you know, here's the donut of the autonomous driving ecosystem. And you have sort of the 5 parts of it: the automobiles, the suppliers, the semiconductors, and the communication software, and then finally into the shared mobility. Looking back, you know, when we started investigating and drilling down in this in 2016, it was sort of a Rothschild approach to things. You know, you couldn't buy the automobile makers. The Rothschilds always said when the wars were going on between France and England, they didn't care which side won. They were the arms distributors. So they just gave arms to each one. So that's exactly what we did in that space. We got into the semiconductors. And, you know, the automobile companies and the suppliers, they all had to buy the semiconductors, the digital and the analog. But it's interesting now, as you go around, this is a massive, massive market. This is going to change. I think the autonomous driving ecosystem is going to change our life. It is changing our life. But in 10 years, it's going to be mainstream. And right now, they actually have Level 5, which is completely autonomous. No driver, no driver's seat. And they have Level 5 through Waymo over in Phoenix, Arizona.
Test runs there,
yeah. And so it's complete Level 5 autonomous driving. And that will be mainstream. If you listen to Elon Musk, he says it's going to be 2 or 3 years. But mark my words, in 10 years, it's going to be autonomous driving when we're out on the streets. Now, the opportunity...
You know what? Let's take a little break and start taking some calls. Because I got a feeling when I take a look at this graphic, we're going to be able to use it again in the show because there's names in here that some of our viewers are probably going to want to talk about.
Yep.
So we'll take that little break. We'll be back with Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas. To answer your questions about technology stocks, give us a call. It's toll free. 1-855-326-6266. Going to start things off with an email from Sheriff. Wants to talk about OpenText. Says, I have a small position in OpenText. Is it worth investing more in the near future if the prices continue to drop? Let's talk OTEX in Toronto.
Thanks very much for your call. Yes, we own OpenText. Small position. It's just slightly less than 1%. Just for the viewers, OpenText, it develops and sells enterprise information management software, very much into the servicing side. We got a price target on this of actually down in the States. I think that's the Canadian one.
Yeah, that's the Canadian listing.
Yeah,
there.
so we've got a...
So you got yours is based off the American one? I can pick up the American quote right now on my
So
screen.
we have a price target on this of 44.50, and it's actually pretty close.
In the States, we're at 43.12. Yeah, 43.12 in the States.
It's very fairly valued. We'd look to actually buy this, you know, if we can get a 30-something handle on it as it goes down. You know, it is a leader in that enterprise information management software space. Gartner, the big research company, puts it up in this, you know, upper right quadrant. So it's very much sort of the poster child of that space.
Okay, we have Peter on the line from Vancouver. What's your question, Peter?
Oh, thank you for taking my call. Mr. Kim Bolton, you are a very great manager. Last month, I asked you about AMD when it was $28.76. Now it's $37. You are so good. So can I ask you, is there any more runway? And please, I beg you to give us, your tips is all US dollar. Can you give us the benefit of your wisdom in giving a Canadian stock? Maybe you give me a Canadian stock after AMD. Thank you very much, Mr. Bolton.
Good to hear from you again, Peter. I'm going to be out there in Vancouver in December, so we'll have to connect at some stage. So AMD, you asked about AMD. Currently sitting around the sort of upper 30s. We've got a price target on it of $41.50, so it's pretty fairly priced. I think, Peter, you're also asking about Apple, and you're going to hear this as I carry on today. You know, Apple will continue to melt up. I think you're going to have an opportunity to buy it a little bit cheaper than where it is right now. We have a 265 price target on it. And then finally, Peter, you were asking about a Canadian stock. And I would actually suggest that maybe, Peter, you look at CGI. You know, we own CGI and also Accenture, but it's with the enterprise community really hunkering down and looking for the efficiencies of digitalizing businesses, it's the likes of CGI and Accenture that come in and actually facilitate that whole process. So maybe perhaps look at CGI.
Okay, Henry on the line from Hamilton. What's your question, Henry?
Good afternoon, gentlemen. I have no idea which of the streamers is going to win, Disney, HBO, Apple, et cetera, et cetera. Using your Rothschild model, could you recommend a technology company that is like the picks and shovels, a supplier to them that I can ride to a profitable future? Thank you.
Good question.
That is,
who are the Rothschilds back in the streaming wars?
That is a really, really good question. Henry, so you could buy, it's sort of like the autonomous driving ecosystem. You can buy, you know, the hardware people like the Netflix or the Disneys or the HBOs or whatever. But they're fairly well priced right now. So maybe you could look at the chip makers, but I'd even sort of look at the AI producers and even at the likes of of NVIDIA or AMD. I think that's sort of the Rothschild side of it, of looking at the chip makers, the graphic processing unit guys of NVIDIA and AMD.
Okay, Bob on the line from Midland. What's your question, Bob?
Hello, boys. Coming back on the CGI question, you know, it certainly seems to be a proven love stock, great track record in it. It looks like it's close to breaking out again. My concern is do you feel that unfairly in a correction of tech stocks, it might get, I think, unfairly tied up in that correction when really I don't think it is, but I'd like your comment. Thanks, guys. Bye.
Dragged down with the rest despite its merits.
Well, you know, in the tech arena, you have the hardware, you got the software, and then you have the service providers like the CGIs, like the Accentures. As long as, you know, tech end users continue to spend to get efficiencies and effectiveness to digitalize their business, there is going to continually be an appetite for the CGIs and the Accentures. So I'd sort of go between the two of them there. As per the pullback, I don't think you're going to have a significant pullback because there's just a lot of money sloshing around and looking for a home, especially, you know, from the buybacks to the liquidity infusion the Fed and the central banks are doing. So I just don't see, mind you, the market is very, very long at this stage, but there is some cash on the sidelines. So I'd look for the pullback to actually add to your CGI position.
We have an email from Ken in Smiths Falls, Ontario. 10 cent. We'll start 10 cent. What do you think about it for a long-term hold?
I'm glad you say long-term. So we own it. We actually we own it through the Crane Shares CSI China Internet ETF. We got about a 1% position in that. It's currently trading in New York around $41. We've got a price target of $53.70 on this. It is undervalued. It is China's largest social network. It's the largest online gaming provider. It's the largest online advertiser. So it is the leader. And on top of that, they're getting into the whole cloud services side of it. And additionally, they're getting into the whole fintech business, and the secular growth driver of Tencent will have a long runway with all these business units moving along. So that's why we like it. And you know, it's got an upside here, 41 up to 53. That's like 25%. I think it's one of the better ones out there.
Likes the 10 cent. All right, we'll take a little break. We'll be back with Kim Bolton, the president and portfolio manager of Black Swan Dexteritas, to answer your questions about technology stocks. So give us a call. It's toll free. 1-855-326-6266. We have Stephen on the line from Vancouver. Good to hear from you, Stephen. What's your question?
Good morning, sir. Thank you for taking my question. And Mr. Bolton, my question is on IBM. I wonder, sir, if would be a good time to get in, and if I may have the market consensus, please. Thank you, both gentlemen.
Sure thing, Stephen. Thanks for the call.
Thanks, Stephen. I wanted to take the call because IBM, in this sort of environment meaning the whole year where there's a great deal of volatility, we use IBM as less of an investment and more as a trading stock.
Okay.
And so in US dollar terms, you know, if you can buy it with a 130 and sell it with a 160, I think it's a great trading stock. The other thing that
I'm no technical analyst, but yeah, there's been a little bit of a sort of a trading pattern there, right?
Yeah, yeah.
Been up and down, up and down. There is opportunity, I guess, if you're nimble.
Yeah. So we've actually we've bought and sold this. We're looking at it again. Sort of puzzling that it's back down in the 130s because this is the area that we normally seem to like to buy it. So we're sniffing around to buy it. The other thing that I like about IBM is that they have a lot of hidden value, especially in their patents. And you're going to say, well, that sort of sounds like BlackBerry. Yeah. But the patents that they have are so much immense, and especially into the sort of whole cognitive computing side of things, and the AI, machine learning, deep learning, which are going to be extremely, extremely valuable, for example, in that autonomous driving ecosystem.
There we go. Is IBM on this map?
Yep.
He's on the map. There we go. We knew they'd start popping up throughout the show. Steven, as far as the street's concerned on IBM, 7 buys, 16 holds, and 2 sells on the name with a 12-month target price of $148 and change. Got an email from David in Toronto. Wants to talk about First Asset Tech Giants Covered Call ETF, the TXF. Would you consider buying the TXF for tech exposure while getting a nice yield? TXF.
Thanks very much for the call. We don't own it. We follow it, but they sort of do it on a smaller scale of what Black Swan Dexterra Dusk Global Tech Hedge Fund actually does. You know, so this ETF invests in the largest 25 tech vendors, not end users. They're vendors, and out of the New York Stock Exchange and the Nasdaq, and they're all sort of equally weighted, which is sort of odd. And then they have no more than 25% of the portfolio securities have call options over top of it that actually allows them to get that yield, the nice yield that you mentioned. It's a good investment, I think, in sort of good for early stage bull markets, but later stage. It doesn't give you the flexibility, and certainly not into a bear market. Is this the place that you want to be involved? So, and then on top of it, it actually hedges out. Well, they have 2 of them. They have one that's hedged and one that isn't. So, it's sort of similar to what we do. But we do sort of small, mid, and large cap. They're just large cap. They do covered calls. We do a hedging overlay. And you can see it actually in the price action that goes on here. It is sort of a barometer of those 25 vendors. And I think it's you get yourself sort of squeezed into a corner with this ETF.
We have Chris on the line from Edmonton. What's your question, Chris?
Yes, good morning, gentlemen. My question is on Alibaba. They're listing in Hong Kong on Monday, and I'm wondering what the implications in the share price would be because of this. I'll hang up and listen.
Hey, interesting question. Yeah, we've been waiting for this listing for a while.
Yeah, it's a $13 billion IPO listing. It's interesting that its impact, you can see it actually in the likes of some of the other larger cap Chinese stocks, for example, like Tencent or Baidu. Because people have actually taken a little bit of money out of those recently in anticipation of the IPO. It's expensive. Like Alibaba is an expensive stock, mind you. Some of the other ones are too, but you know it's got a PEG ratio that's just astronomical, of in excess of 50. So. We don't own it. I think it's more interesting its impact on the IPO that comes out of some of the other larger cap stocks over there. So we actually think that there will be a lot of people that will be flipping this come the IPO next week, and you'll see it's sort of the rotation back into sort of the other Tencent, Baidu type stocks.
We have Amy on the line in Toronto. What's your question, Amy?
I found a lot of these U.S. software stocks are getting really way high, and actually like beyond my wealth to get them. What do you think about the hardware area, like Qualcomm? I'll hang up and listen.
Okay, what do you think about a name like this? Getting a little pricey?
Yeah. Thanks, Amy. It is pricey, and we actually sold out of it here just last week. A little bit lower, it was around 89.5 that we sold out of it, and we'd hung on to it for a fair bit. But the reason that we'll actually watch and hopefully be able to pick it up back sort of in the 70s or low 80s is that it's a great play into both the 5G and also into the autonomous driving side for hardware, for both of them. And there aren't that many significant players. And those are two huge trends and themes that are going to be going on through 2020, 21, 22.
Okay, Qualcomm. Let's see what the street thinks about the name. They have 15 buys, 14 holds, and 1 sell on Qualcomm. 12-month target price of $94.20. It's only about 3% up from where we are right now. Stay tuned. The past picks coming up next. Time for the past picks. We go back to December 14th of 2018. And you liked Amazon then, and there is some money to be made there.
It's not bad.
You're like, hey, look at that. It's a winner. Do you still like it?
It's interesting. I guess 11% because, well, sort of year to date, we're up about 13. So, yeah, it's still in the top 5 of ours. We have a price target of 2,300. That gives it another 20% from here, right? The retail, you know, when you look at companies, you always want to look at the TAM, the total addressable market, and you look at the total addressable market for Amazon, be it in the retail space or into the cloud space, and it's hard to put a figure on it. They're a leader, and it's perfect. It's a perfect storm for them. So the retail sector is a business is primed for growth. The AWS and the cloud is the backbone of the internet, even though they lost the one for the Pentagon to Azure. And so in the latest quarter, Amazon was shown as a big win in its subscription segment. And you can see this with a lot of the software as a service on the retail side, that they've moved from that licensing into a subscription, and it's actually starting to pay off, and it allows to have more consistent, continual, and growing revenues, and it's worked out wonderful for them. So that's why it's in the top 5.
All right, the next one on the list is Nutanix. I think you and I have discussed this one before. It is not performing. What's happening with this name?
Well, knock on wood, thank goodness we sold it.
you got hit.
So you could see, you know, Nutanix is a cloud computing software company, and it sells hyper-converged infrastructure appliances to software-defined storage companies. And so basically, data storage companies before, when they wanted to upgrade, they went to hardware. The benefit of Nutanix, they came in early. They actually offered software. It was a lot cheaper, and it was perfect. But as usual, the moat was rather thin and short, and there was a lot of competition that came in. You could actually see that on the horizon. So, you know, we owned it actually from the low 20s. We sold it in the high 30s. And then we haven't come back and touched it yet.
All right, the last one on the list, Universal Display Corp. People might not be familiar with the company, but they use pretty much their products every day. We all stare at screens all the time.
That's right. That's right. And you know, there's the iPhone. They're the ones that have the royalty and the patent. And it's an Idaho company. It's out of Idaho, of all places. And so when it comes to the oxide emitting, light emitting diodes technology that they have, it just shortened the width of the screen. All the smartphone makers loved it because it gave them more space to put power in and radio frequencies. Now, we don't own it. We sold it up at around 207. We bought it, actually, if you go back to last Christmas, just under 100. I think it was around 96.
9506, I think.
Yeah, so we sold it up around 207. It will give you an opportunity to actually come in. The other thing I'll say about Universal Display is that there's a lot of competition, very much like Nutanix, but you have a lot of competition coming into it.
Interesting stuff. We're going to take a little break, then we'll be back with Kim Bolton, the president and portfolio manager of Black Swan Dexteritas, to answer your questions on technology stocks. So give us a call. It's toll free. 1-855-326-6266. Got an email from Ed in Montreal. He wants to talk about Activision Blizzard, the video game space. Would appreciate your short-term and long-term outlook for Activision Blizzard. I always want to say Blizzard. I don't know why. I know that's not the proper pronunciation, but it sounds fancy.
We don't own it, but we follow it very, very closely. We have a lot of our investors come from they're serial entrepreneur, tech entrepreneurs. And a number of them are involved in the whole gaming space. So we follow a lot of these gamers, and also into the private, even into the private side. So it's right now trading at 52.5. We have a price target on here of $57. So it's got maybe about 10%, but we'd like to see it and actually be able to buy it with sort of a 40 handle on it down there. They just reported, investors very much pushed back on their Q4 guidance. And we believe that they were just being sort of conservative, but we believe there are a lot of sort of opportunistic investments that are sort of in play here. They keep a lot of things to their chest. And however, we see, and through our insight with our serial tech entrepreneurs that are involved in the gaming space, we believe that Activision Blizzard is going to return to growth next year. They have a lot of things going on the game development side, on the IP creation side. So it's only 52.5. If we can get it down in the 40s, that's where we'll buy it.
Is this the kind of name when you're investing in it and you're trying to decide whether you want to stay invested, you have to sort of stay on top of what the hot gaming titles are? I mean, there comes a stage, and I'm at that stage in my life where I don't know what the kids are into anymore. There's a bunch of games, I hear the titles, it all just goes mush in my head. But it seems to me, if you're going to do well, you have to have the hot game.
Exactly. And that's why, these serial tech entrepreneurs that are involved in the gaming space that invest with us, they have their own private companies and their own private equity that are involved in the gaming space. And we take care of their participation in the publicly traded space, like the Activision Blizzards and Electronic Arts and Take-Two and so on. But that's where we get our insight from those serial tech entrepreneurs, because they have gamers that recite to them what are the hot things.
Yeah, what's hot, what's not.
Yeah. And so do we actually play the games? No, we have the luxury of having that insight through our network to actually find out what's hot and what's not.
My expertise in the game stopped when there was a joystick and a button. That's as complicated as I can get. You're in the joystick and the button, and now I had no idea.
But Greg, it is massive business.
Oh God, yeah.
Yeah.
Enslaved my children's minds, that's for sure. We got an email from Anna. She wants to talk about Shopify. What do you see in store for the future of Shopify?
Shopify, we've actually built up a position. You know, Shopify, if you go back a month and a half ago, and it was above $400, and that's the Canadian. So if you actually look on the U.S. dollar side, it's sitting right around 310 right now, and we have a price target U.S. dollar-wise of 375. But what happened is that they did a secondary offering of 1.9 million Class A shares. It diluted some of the shares. It got blown out of proportion. Mind you, it was expensive, above $400 US. But now, trading around 310, you know, it's now valued at about $35 billion, but the enterprise value of Shopify is around $39 billion. So it's actually good value at this stage. And that's why we've been buying, you know, it dipped below 300. We started to buy some up. And we've got about a 3.5% position in this.
All right, that was Shopify. We have a caller on the line, Jordan from Winnipeg. What's your question, Jordan?
Hi there. I'm looking to get to find out what you think about your perspective on Aptiv and where you think that they're going to be going for the short term and the long term, whether that's short term, hold it, and short term, buy it now, sell it soon, or buy it and hold on to it for the next 10 years while they develop their autonomous technology.
All right, so we'll cycle back to the beginning into your chart. We have a company here in the whole autonomous driving space.
Yeah, and there it's sitting over in the supplier side of things, and it's but it's a supplier, sort of arms supplier to the automobile industry, and it's just massive, and it's involved all the way from safety and security to basic hardware. One of the things that it's really sort of developed a leadership in is in the whole active safety side of things. So right now, there it is sitting at $92.50. We have a price target on it. Actually, it's a price target on it of 95.5. So question is, short term, I would say it's still a hold. I think it'll continue to melt up. It's in the right space, and it's a leader in there. And if you actually see in a correction, keep it at the top of your list, because this is going to be a long-term hold for that whole autonomous driving ecosystem that is going to leak out over the next 10 years.
All right, that was for Jordan in Winnipeg. The street likes it. 15 buys, 7 holds, and 2 sells. Let's take a call from Simon in Burnaby, BC. What's your question, Simon?
Hi there. Thanks for taking my call. Just wondering if Kim has a favorite pick in the software security space. Thank you.
All right, good question. Anything there?
Thanks, Simon. Well, we do have, and the reason I hesitate is that our pick is CyberArk. Mm-hmm. But they reported last week, and it popped up 11%.
Oh, so it's not as cheap as it once was
exactly.
Just 7 days ago.
Yeah. So other ones, you know, you can always buy the poster child of Palo Alto. You could buy that. If you ever see a pullback in the market, I'd put it at the top of the list of CyberArk. Checkpoint would be interesting. I wouldn't touch FireEye, but yeah, it would be PANW or CyberArk.
Okay, we're going to take a little break, and then we'll be back with Kim Bolton, the president and portfolio manager of Black Swan Dexteritas. He's answering your questions on technology stocks. So give us a call, toll free, 1-855-326-6266. David in Montreal sent us a question, wants to talk about Salesforce. What's Kim's opinion on Salesforce.com?
Thanks very much for the question. Salesforce, this is the king, the poster child of the software as a service space. They were the ones that left the licensing, got into the subscription, sort of led the way for everyone else. It is 4.5% position in our portfolio. It's sort of treaded water for a while, but you know, where can you find a software as a service company that has had revenue growth rates above 10% consistently for the last 10 years? It's just an amazing story. People always question, as these massive companies get bigger, what's the extension of the runway and how are they going to keep that up? You know, they've acquired a number of smaller ones, but then they bought Tableau. Thank goodness, thank you very much, for $15.7 billion. And so this again extends the runway for them in the software as a service space. So currently trading 162.5. We have a price target on this of 183.50.
Is that how you keep the competitive moat intact as well? If there's a young up-and-comer and you're a company this big, you just buy them. Take them, fold them in.
That's right.
Not too bad at all. All right, we got Ben and Kamloops on the line. What's your question, Ben?
Yeah, hi, gentlemen. Yeah, my question for Kim is, what is his thoughts on Slack? Is this a long-term hold?
Thanks, Ben. I wanted to take the call because we follow. We don't own it, which is interesting. We own a lot of the messaging services. Again, in our investment advisory committee, we have a number of serial tech entrepreneurs that are involved in the messaging business, from Facebook, from vContacte out of Eastern Europe, from Telegram. And you know, I use Slack, I don't know how many times, at least a dozen times every day. So we've just been sort of watching it. And we believe it has a long runway, but you have to watch it. We didn't buy it on an IPO, but we follow it because we believe this space has a great deal of value.
That was interesting. When you just said we didn't buy it on the IPO, so many times I hear that from people saying, listen, if you're interested in a name, this is not the time. And obviously, we look at the past 3 months, and you feel pretty burned if you got in pretty early. How long of a wait or a runway do you give it on a hot name and an IPO? Just let the dust settle and see what kind of company it's going to be and what kind of potential it has.
You know, on an IPO, it doesn't have that much to do about the fundamentals. It's more about, you look at the price action of existing, when people are going to be allowed to actually come in and monetize, take money off the table. You know, we really like the story of, for example, Slack. And even with WeWork, we have some investors that actually come from WeWork that didn't know all this stuff that was going on sort of behind the curtain. But you have to watch the price action rather than, and that's what we look at when it comes into the IPO and out of it, because you'll get a flavor about the flows, the capital flows that are going into that business.
Good advice there. We got an email from Don in Bonita Springs, Florida. Wants a 5G recommendation. Which company is your best pick to play the 5G? The coming change of everything, right?
Yeah. Everything
is going to be instantaneous.
Exactly. Thanks very much, Bonita Springs. Boy, it sounds warm. So we have a number of plays going on in the 5G. We have Ericsson. You know, when it comes to the sort of the hardware side, you got 3 players. You got Huawei, you can't buy it. You can buy into Ericsson, or you can buy into Nokia. We did a lot of homework on this, followed them, and you know, knock on wood, we got the right one of Ericsson. And you know, Ericsson they just came out, they had strong results. It's sort of the opposite of what actually happened at Nokia. They had a solid quarter. It was driven by 5G momentum, strong execution in the whole networks business. But you're right, they're in the right place. It's going to have a long runway over the next 2, 3, 4 years in that whole 5G. It's not just in how 5G is going to impact mobile internet. It's how 5G is going to impact sort of the huge rise of the Internet of Things. And we have a lot of small business owners, and you know, the impact of that in their shops and in their factories, and the whole digital twin side of it and what 5G can do is just going to be massive. And it's maybe not change our world as much as the autonomous driving, but it's definitely going to change our world. And I just took the subway down here. With the 5G, we'll actually be able to have connection.
Actually surf the web when we're underground.
Yeah.
And no more drop connections when almost into the tune on the way home on the GO train.
Yeah.
Quickly, I just want to ask you before we take a break, Ericsson, a bit of a competitive advantage just due to the fact that the Western world are very skeptical of Huawei. I mean, still, security review is still going on in this country as to whether we should use them for 5G.
Yeah. You know, when Nokia reported about 3 weeks before Ericsson, it dragged Ericsson all the way down into $8 range. I don't think it went under 8, and it gave you a great opportunity. We actually have we got a 1-year price target on Ericsson of $10.80, and right now it's sitting right around $9 US on the ADR. So it's a massive investment, sort of like the semiconductors, and everyone says, well, why aren't there more semiconductor companies out there? It's because there's massive investment into those foundries, and there's massive investment that has gone into Ericsson over a number of years, and now we actually get to play it out and make some money on it.
We're going to take a short break. We're going to come back. The top picks are up next. It's time now for the top picks. First one on the list is Cisco. What do you like about Cisco?
Well, this is going to be an interesting one, and I don't think I've ever been on the program when I've recommended something when they're reporting earnings that night. But Cisco's coming out tonight.
Oh yeah, after the close tonight.
And the reason I actually picked it, you know, it is a significant holding for us. It plays in all those right themes and trends, all the way from 5G into autonomous driving as an arms dealer into those ecosystems. But it also, the current valuation is pretty good. You know, it's got a PE ratio of 18.4, forward PE of 13.6. And the yield on Cisco is just shy of 3%. It's 2.9%. It's got solid fundamentals. We see over 40% upside over the next 3 years. And we got a price target on here for 1 year of 55.65. And so, you know, when everything is, the indices are reaching new highs, it's difficult to find something that is good value, and Cisco is one of those.
Okay, so Cisco is in the good books. Alphabet, the artist formerly known as Google. I still call him Google.
Yeah.
Hey, I can't get the alphabet.
Well, it's a symbol too.
Yeah.
And so, you know, Google is one of the best positioned companies in the secular trends of digital advertising. They've got that cornered. But you know, they also have sort of non-advertising revenue streams, all the way from Google Cloud to hardware to Google Play. And then the big one is Waymo. And you're going to hear an awful lot. You know, we had an investment committee this morning, and someone asked, because we were talking about the autonomous driving ecosystem, and someone asked, and he said, so when are we going to get to 5G? You know, Waymo has got it. They actually have autonomous, level 5 autonomous driving taxis for Google employees in Phoenix, Arizona. That's where there is no driver's seat, there is no steering wheel, there's no pedals, and Waymo is already there. The reason they're there is because they started this whole process back in 10 years ago in 2009. So you can imagine sometime into the future of the next few years that Waymo is going to get spun off out of Google that is going to give tremendous value to Google.
All right, but a minute left on the clock.
Okay.
We have PayPal as the final pick.
So PayPal, it's well positioned in the whole global digital payments ecosystem, and it competes very, very well with the big behemoths of Visa and MasterCard and American Express out there. It's producing 21% revenue growth rate, expanding profit margins. The stock got a little too expensive. But we got a price target of $125.40.
All right, Kim, it's always a pleasure to have you here. Final 10-second thought for the audience?
Look for a little bit of a pullback, in the second half of November. Use that as an opportunity to buy into some of these secular digital processing companies in the technology arena.
Look forward to the next time, Kim. Thanks for joining us.
Thanks a lot, Greg.
That's all the time we have for this edition of Market Call. Of course, you can watch it again Monday through Friday, 1 a.m. Eastern, 10 p.m. Pacific. Of course, we're live Monday through Friday at 6 p.m. Eastern for Market Call tonight. And as always, please consult a qualified financial advisor before you make any investment decisions. Thanks for joining us. Hope to have you with us the next time.